Hey everybody, good to be here. My name is Brent Moores, and it is time for condors, calendars, and butterflies, and other strategies as well sometimes. But I'm just glad you're here, and it's Friday the 13th, everyone. We're glad to have James Boyd in the chat helping me out as well. I appreciate James. Make sure you check out his Investing Master Series that occurs on Tuesdays, 11 o'clock Eastern Time. You can follow all our webcasts, not just my webcast, not just James' webcast, other webcasts on that Trader Talks channel, by the way. So just make sure you subscribe to that. Also, you can follow us on X at Brent Moore CS, at James Boyd CS. And this week, what I want to do is I want to do kind of a follow-up to what we did a couple weeks ago in this webcast. And that is, a couple weeks ago, we talked about scanning and finding. How do you identify, how do you find those potential stock candidate or trade candidates for more bullish trades? This week, we're going to flip it around and do more bearish trades. So we'll talk about that. But before I do so, let me just remind you, options do carry a high level of risk and are not suitable for all investors. And you do need to be options approved, and there's different options levels of approval you need to go through. At Schwab, the material today is for general informational and educational purposes only. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount and the paper money application. That's what we're going to be using today, the thinkorswim desktop software. Paper money, that is for educational purposes only. It does not assign short options early. Your real account will. So just be aware of that. All investing involves risk, including risk of loss. And past performance is no guarantee of future results. Stop orders do not guarantee that you're going to get out at or near the stop price. And Schwab does not recommend the use of technical analysis as the sole means of investment research. See some familiar names in the chat. Glad you're here. Thank you very much for joining me. Let's head on over to the thinkorswim desktop software and just take a peek at the markets. S&P 500 down 0.5% right now. Not a bullish look going into the weekend, to be honest. I mean, for a while, I was looking at this as kind of a support level up until about a week ago. And now it's more of a resistance level probably, because we broke through it and came back and bounced off of it. We have lower highs, lower highs. We have lower lows. We've broken through our 50-day and our 20-day moving average. That's blue and red respectively. This is actually a 200-day moving average. Will that hold? I don't know. But when we're looking at trades, we're going to consider trend. In fact, we're going to consider, even though technical analysis isn't the sole means of investment research, it is something that we use in this webcast. And I want to make things, when you are trading, to make it as easy and efficient as possible for you. That's the goal. So if we're trying to find potential trade candidates, one very common approach is to create a scan, save that scan as a watch list. Then you don't have to deal with the scan in the future at all. You just look at the watch list. You just pull up on your thinkorswim platform, just go up and pull up a watch list that you want over here, okay? You've got personal watch lists that you've saved. You can do whatever and pull that up. And that's just a really easy way, because once you do that, in fact, last week, 2 weeks ago, we did one that was bullish option scan, I think is what we had, okay? So if I want to pull that up, I just do that, click on it. There's my stocks I'm looking at. Not a lot of results right now because, to be honest, the market's not real strong right now. But if you're interested in that scan for the bullish scan, actually, I put it in the description on this webcast. Also, if you're interested in that webcast, I just put the playlist in the webcast too. And so if you go to the playlist, you can see all the past episodes, including the one from 2 weeks ago where we talked about bullish scans. Now you could take that bullish scan and flip it around and just do bearish stuff with it. But I wanted to show you a different scan this week, which is actually even more simple, that you can save. Remember, the goal is we're trying to keep it simple. and then you can just save it. Once you save the scan, it becomes a watch list. We'll go through that process. But we're going to start with technical analysis. And one of the key things in technical analysis is the trend. So let me just first start off with the stock here. Okay, let's start with the trade. And this is a trade that I got that came up on the watch list. Oh, excuse me, yeah, on the watch list or on the scan I created. And I'm going to share that scan with you in just a minute, okay? But let's just look at this. I've got a downward trend, right? I can draw a, oops, I didn't want that. I can draw a trend line if I want, like that. Pretty much kind of right on that 50-day moving average, by the way, okay? Lower highs, lower lows. From a trend perspective, I don't think many people would consider that to be very bullish. But let's do something that's kind of, it's not super bearish, right? I mean, if I'm super bearish, maybe we're looking at just like a long put on this. But I'm going to go with the class title, which is butterflies, condors, calendars, and butterflies. And let's look at a butterfly spread just as an example on this. And I'm going to make it a little bit more bearish. Remember, with the butterfly spread, you're picking 3 strikes. You're going to buy a strike. You're going to sell 2. Well, you're going to buy a contract. You're going to sell 2 contracts. And you're going to buy another contract at a lower strike. Okay. The target is the middle strike, right? You guys know that by now. The target on the butterfly is the middle strike. So if theoretically there were a strike at 26.86, that would be a totally neutral trade. If we pick a lower strike, then we're making it a little more bearish. If we pick a higher strike, we're making it a little bit more bullish. In this case, this is what we're going to do. I'm just going to go to the trade tab. I'm going to go out to, I'm just going to go out a month here. I'm going to go out to the monthly contracts. Those are in white right there. I'm going to use puts, and we're at 26.88, and I'm just going to kind of make this more, well, a little bit more bearish. So I'm going to make the 25s the center strike. So I'm going to click on that, click on the 25, and I'm going to do 2 of those. I'm going to do the 22.50. I'm going to hold down my control key. I'm going to buy that. I'm going to buy the 27.50. And I have this, and it just comes up as custom. Let me just kind of make this a little bit bigger here. And I'm going to make this 2 contracts. That's a butterfly spread. Now, you're saying, Brent, could you have just done it by going up here to spread and doing butterfly? Yeah, I could have done it that way too as well. But I want you to be aware of both ways to do that. Because a lot of times when you're doing more complex trades or different types of trades and you want little variations, the kind of cookie cutter approach to just picking spread isn't going to work, and you're going to want to put on different legs of different things that don't necessarily have an exact name there. But what we can do is we can take this trade and we can analyze it, and we can say, hey, this is what it looks like. Okay, and let's see, these are April 17th, April 8th, that works. So, and I can do this, and I can set my slices to break even. And you can say, well, you know, from a probability standpoint, now probabilities aren't guaranteed. It's not looking spectacular, Brent. 32% of that's break even or better on that. Let me just zoom this in. Let me just kind of shrink this down a little bit so you can see it a little better. Basically, our break evens are around 23 and 27. Okay. Well, does that fit what we want here? Well, let's kind of just look here. 23 is about here, roughly. 27 is just about here. Kind of a fairly tight window. We are bearish on this, so this is a little bit bearish, isn't it? But we can tweak that and make it a little bit more bearish. And those of you who have been around a little bit with me know how to do that, right? We can just skew that butterfly a little bit. I can make the 27 a 28 or 29. I forgot what strikes we have available here on this, to be honest. Let me just double check here. 27.50, 30, okay? 30 is the next strike up. So I can make this a 30 strike. And now let's look at what happens to our risk profile on this. Do you see how we shifted the graph? Now, Chris said, would making it an iron condor increase the probabilities? The answer is probably, Chris. And, a lot of times I'm asked the difference between like a butterfly and a calendar, an iron condor. And one of the differences I say is typically butterflies will give you a better peak profit, but the probabilities are a little bit worse. That's why in this webcast, what you're going to notice is when I'm doing butterflies, more often than not, we're skewing them. That's exactly what we're doing here in this case. Okay. Now, you could do a put condor as well. Yeah, no doubt on that. Probably better probabilities, but look at what we've done by skewing this now. Now, if I go and I set my slices to break even, now we've turned this trade that was, what was it, a 32% probability or something like that, to 60% probability. Our break even is almost at 28. Okay, break even is almost at 28. If it goes down, well, look, it can go down as much as it wants, really. This isn't problematic. We're still making a little bit, not a whole lot. Okay, but really the sweet zone here is kind of between 24 and 26. That's the ideal zone in there. Okay, but certainly we've increased the probabilities there. We don't want it to go above 28 there in that case. So anytime you're doing the trade, double check. Just go, look, we don't want it to go above 28. Well, we're bearish on this. So that's about here. It's above where we're at right here. And of course, we can skew this a little bit more. We can shift the strike prices up a little bit or whatnot. But in any case, this is a bearish trade. Butterflies aren't always neutral. If you skew them, especially if you skew them, you can do it a different way. So let me go back to the trade tab. And we said we were making this one a 30 strike. And let me do, now I'm going to do, let's do a couple. I'm going to do, just kind of double it there in terms of quantities. Keep in mind, one of the challenges with advanced options is commissions. If I do this, I've got 8 total legs here, 8 total legs. So keep that in mind as you do that. But we're buying a couple butterflies, and I'm going to put this in my I don't have my group sorted, so we'll just send that and put that out there. Okay, so we'll see if that fills. It wasn't allowing me to put in a group because over here I didn't have my group showing. Okay, now the groups are showing. It filled, and then now in the future we should be able to put them in our groups. Now, where did I come up with Trade Desk? I'll show you how I came up with Trade Desk. I did a scan. Okay, let me just we're going to reset this scan. Let's just reset. Yes. We're going to remove all filters. And remember, if you do a scan, if you create a scan, take a few minutes to create a scan and save it, then you don't have to deal with it in the future. But I'm going to start with S&P 500. Okay, S&P 500 stocks. And I'm just going to say I want penny increment options. That's under public. Those are going to tend to give us more liquid type stocks here. and hopefully more liquid type options as well. And then we're going to start adding some filters. Now, these filters I'm going to add are study filters, so they're not going to work in paper money, but they will work in your live platform. And just remember scans and scripts, and I'll share this scan with you in a little bit, but they're not guaranteed for accuracy or timing. I'm going to go to volume, though, and just make sure that average volume is enough. That's a million. A million may sound like a lot, but really it's not that much. I'm going to add another zero in there and make it 10 million. And so now I have 70 total stocks. We'll narrow that down a little bit more, because what I'm going to say is I don't want any stocks that have earnings coming up. So I'm going to go to, again, study filter. I'm going to go to corporate actions. I'm going to go to earnings, and we're going to say it doesn't have earnings anytime in the next, we're going to say 20 bars. Okay, so that's basically a month. By the way, when you're doing this, so let's see what we got. That gives us, we'll let it think here for a sec. Come on. Okay, sometimes if it does that for you ever, by the way, you click on the scan and it's just thinking and thinking and it's not doing anything. If you just tweak one of these parameters by like 1 and then redo it, usually that'll kind of knock it out of its stupor there and get it thinking. One thing I would point out, and I don't know if we're going to be able to see this. Look, on each of these parameters, it gives you a time frame. The default is going to be day, D. But if I have this on week, I'm not sure what you would do week in this particular parameter, but just go with me on this. If I make this week, it's going to say it doesn't have any earnings any times in the next 20 weeks, which is probably, I would assume, just give us 0 results. Yeah, no matching symbols on that. So, come on. Okay, we're going to do that little trick there. So we're going to keep that as day. But there's going to be times where maybe you're looking at moving averages or something like that, and you want to use a 40-week moving average instead of a 40-day moving average. You can change it right there. Okay. Now, so far, this says nothing about downtrend. And there's a lot of different ways to do downtrend. You can say, well, I want it below this moving average and this moving average. Or you can go, let me just kind of show you real quickly at some of those. If you go to study and you go to, say, price performance, you can find stocks that are gapping down. You could say the stock is 5% below where it was a month ago. Nothing wrong with that. That's what we did 2 weeks ago in this webcast on the bullish side of things. Price direction, we could say it's going down the last couple of days. You could go the stocks in a particular relationship to a moving average, stochastic RSI, all these. There's a whole variety, and I'm not going to go into them today. I'm just going to do one simple one that you may find, have never heard of, may have never used. It's not one I've used much. Simple trend channel filter. It's under the Stocks and Commodities magazine. Simple trend channel filter. Click on this. Now, you're going, what is simple trend channel filter? Well, one thing you can do is you can always go to education, go to Learning Center, and type in simple trend channel. You'll see it right there. Simple trend channel filter. Okay. And then it's going to come up and it's going to give you a little explanation for it. So not just for this one, but if you have like others, this is a pretty good resource for you. Go to the Learning Center. It gives you, there's a like if you want to learn more about think scripting and whatnot, you can do that. You can search, there's a search function. There's, a lot of these technical indicators you may not be familiar with. There's a lot of technical indicators I'm not familiar with, and I have to use this and look. But you can read it that way. But ultimately, when you're scanning, the proof is of whether you want it, whether you like it or not, is going to be what the results come up with. It may sound great on paper, so to speak, but if the results aren't giving you stocks you like, then forget about it. Just don't do it. Don't use it. Find something else. So that's it. That's going to be the entirety of the scan right there. It took those 60 stocks and narrowed it down to 19. You can make it uptrend or downtrend. I made it downtrend. And it gives you different trend checks. This max trend check. You may have noticed, like when we look at TTD was on the list earlier. It's still there, yeah. If you go to TTD, I have this other moving average that I don't typically have on there, and that's that 200-day moving average, because basically what it's saying is the 20 days below the 50 days below the 200-day moving average there, okay? A lot of different ways to scan, but again, it's going to come down to, do you like the results here? Once we have the scan, what we're going to do is we're going to save the scan query, and we're going to say, just move this over. We'll call this bearish options scan. Click save. Okay. Now what I'm going to do is I'm going to share this with you if you want. You don't bearish options scan, share, boom. I will put this in the description for those of you who are watching on a recording, watching this recorded, because you don't have access to that chat I just put in. It's in the description, okay? So by the time this gets posted, it'll be there, because I'm going to do it right after this webcast. But here's the thing. Remember, I said we want simple. Okay? That wasn't too hard, was it? I don't think that was too hard. In fact, it's even easier if you just take the link I gave you. You take the link, you go up to the gear up here, and you click on Open Shared Item. You paste it, copy and paste that link in there. Click on Preview. It probably gives you a chance to name it, I think, there. Name it whatever you want, and then click on Import. And then you got a scan that's imported. And then what you have is a watch list that's saved for you, personal watch list. We just named it bearish option scan. When I pull this up, I have it right here. And then just make sure that is linked. It's linked. I have a orange 7. You can pick your favorite number or color. Just make sure they're the same there and there. Okay. If they're not linked, it looks like that. Just click on that, pick purple 5 or whatever. It doesn't matter. And then when you look at them, you can just kind of go down like this and see, do I like these or not? Are these kind of giving what I want? Now, you can use a chart for the technical analysis. But one of the things is, as part of the scan, we limited it to S&P 500 stocks that are penny increment options that are trading at least 10 million shares a day. So presumably the liquidity is going to be a little bit better on them, but it's not a guarantee. Some of these on some options do not have great liquidity, so just make sure you check on that. Okay, let's move on. Let's take other examples. We did TDD, trade desk. Okay, here's Uber. Okay, well, again, going back to our technical analysis, we're going to say this is, by almost anybody's definition, I think, a downtrend right there. I'm going to say that this is more of a bearish type trade. I'm assuming it's going to go down from here, lower highs, lower lows, maybe somewhere down closer to the 70 level there. Now, if I think this is going to immediately drop to 60 or something like that, or, soon, maybe a long put would be the best thing for me. But in this case, I'm going to do an iron condor, but there's different ways to kind of shift iron condors. I showed you one a couple weeks ago. Remember, with an iron condor, you're doing a short call vertical and a short put vertical. That makes up your iron condor. And what we did a couple weeks ago was we differed the number of contracts. I don't know whether it was 2 and 1, but like it was like short call vertical, short put. That's supposed to be V, short put vertical. okay? We differed the number of contracts there on that. That's one way. If you have more calls than puts, you're making it directional. Okay? There's another way to shift it, and that is you can have the same number of calls and the same number of puts. You can have equal distance on the strikes, but you just do lower strikes. If I have my strikes here and here, the center point is going to be kind of where my target is. If I shift the strikes further lower, my target's going to be a little bit lower, and vice versa if I go higher. You can also shift the width of the strikes, the width between the strikes. So let's do this. Let's start. We said, we're at about 73 right now. I'm going to just start with an iron condor. Okay. And again, I'm going to go out about a month on this. And I'm going to use my delta. This is a delta column. And on iron condors, very often what we'll do is, in this webcast, is we'll say, pick something about a 20 delta, okay? 20 delta on the calls, that'll be your short call. 20 delta on your puts, that'd be your short put. But if you're going to shift it more bearish, what you may do is you may shift up the delta and go a little bit higher. We don't have anything right at a 20 delta, but instead of going to the 17 delta, I'm going to go to that 24 delta, meaning the calls are going to be a little bit closer to the current price, a little more threatened. We'll bring in a bigger credit on those, but we're also making it more bearish. So I'm going to do that 80 strike there on the calls. Similarly, on the put side of things, I can do, I can go, again, we don't really have it at 20. I could go to 25, but that isn't making it more bearish. That's making it more bullish. I'm going to shift it down to maybe an 18. So I'm going to go to the 80 short call and the 65 short put. I'll show you what I mean. I'm going to click and I'm going to sell the 80. I'm going to go up a strike, $2.50 increment. I'm going to click on the 82.50. I'm going to go down, and we said we were going to do the 65. I'm going to click on the bid price, control click on the bid price, and we're going to go down $2.50. Click on the ask price. Okay, this is an iron condor. I'm going to analyze the trade. We're going to look at the trade. Now, here we go. Let's do, first of all, let me just kind of shift that a little bit. Let me check my 418. I think that's the right expiration here on this. Let me just do that. And yep, let's set our slices to break even. Clicked on the wrong thing, set slices to break even. And about 63% right here. Now, it's a higher probability trade. We risk more than we potentially make on it. That's an iron condor. But going back to, I think it was Chris earlier was saying, well, instead of the butterfly, what about higher probability? Well, this is an example. It's not always going to be exactly like this, but typically these are going to be a higher probability. In between these, kind of right in the middle, so to speak, is just what, maybe 71 or something like that, is where the target would be here, 71. So that makes it a little bit bearish if we want. And that is certainly a viable trade right there. I don't know if it's going to make money or not, but it's a viable trade. The other thing we can do is we could say this. We could also kind of unbalance it differently than we did a couple weeks ago, where we changed the number of strikes. In this one, I'm going to shift that 82.50 to 85. Now that unbalances it. Let me set those slices again. Again, I clicked on the wrong one. Set slices, break even. Okay, so about 65% probability. We clearly are risking more than we potentially make on this, especially on the high side. That's a decent loss potential on that. But that's if it shifts. Our break even at that is 81. Let me just jot that down real quick so I don't forget. 81's our break even there. Now look at our break even on the downside, about 64. And furthermore, if it does go down, our risk and our reward, our risk on the downside is pretty close to what our reward is on the upside there. Okay. But we can put in an exit on this if we want, especially if it starts to go against us. Our theory is this is a bullish trade. I want to get out. But 81 is our break even on this. So if it goes up here, I'm going to say if we break above this level, can you see kind of why I'm picking this level here? I'm picking this level. I'm picking this level because I'm assuming this is a lower high that's going to hold, a resistance level that's going to hold. But if we break above that, I'll give it a little wiggle room. We'll say up to maybe 78. We'll get out of this trade. Okay. Now, what about going in the money on the highs? Look, this is, Chris, you're full of good questions today. Could we do an iron condor where we do a short call vertical here and a short put vertical here, or even a little bit lower? The answer is you can, but at a certain point, what I would say is if you're quite bearish on this, you may, well, there's a couple issues. You may consider alternative trades, like if I'm very directional on something, this is kind of a iffy directional, neutral to directional one. The more directional we make the iron condor, the more it kind of begs the question of why don't we just do something like a long put or something like that, or total diagonal spread or something like that. Furthermore, you're starting to get contracts that are in the money, okay? And it doesn't mean just because we'd have a short call that's in the money that we're going to get assigned immediately, but that is always a risk on that you get assigned before expiration. So that's one reason when we do iron condors, we kind of like to keep our short strikes or short call or short put out of the money just to lower the odds of early assignment on them. Not that it's necessarily the end of the world if you get assigned early, but just something we kind of avoid. So good question on that. So there we go. So we said if it goes above 78, we're going to get out of this trade. Okay. What did we do? I think we tweaked that, didn't we? We tweaked that and we did I've forgotten what our tweak was. We said making this 85, 80 and 85, 80 and 85. So let me go back here, 80 and 85. Now, if I want to put an exit order on that, I'm just going to go first trigger sequential. I'm going to right click it. I'm going to create an opposite order, one to get us out. I'm going to make it a market order. I'm going to make it good till canceled. I'm going to click on the gear and I'm going to say, I want to get out of this if we mark greater than or equal to, and we said 78. So that kind of keeps out the bigger risk on that. And, I can do more contracts if I want. Okay. And do it that way. I'm going to confirm and send. And now I should have my groups available. And that's going to be Iron Condor bucket. We're going to send that. There we go. Okay. Let's see how we're doing on time. Okay. We got enough time to do another one. Okay. Let's go back to remember, we have our list, our bearish scan, and you can go through these. You know, some of these we already have trades on, so typically I kind of avoid the trying to duplicate the trade. Have multiple trades on the same underlying. But one we don't is PayPal. Again, it's on our bearish list. Again, you can see our 200-day moving average, our 50-day moving average, our 20-day moving average. Now, maybe you're thinking this isn't the, you know, I'd rather look for bearish trades a different way. You can, but in terms of this is actually giving us this simple trend filter setup, I think does a pretty good job at giving us stocks that have been trending down. Doesn't mean they're going to continue down, but it means they've been, you know, it seems to be giving some good results in that regard. PayPal was one of those. Okay. Hewlett Packard was another one. Okay. So, question from JDLMI. What about implied volatility? What's our ideal implied volatility? Ideal implied volatility is that you have on an iron condor is that you have a higher implied volatility to start. But keep in mind that, and this butterflies too, it's not so much where we start with the implied volatility, it's where it goes. In other words, we can say, oh, we're selling a condor and I want to bring in those bigger premiums, but if the implied volatility just goes up, that kind of defeats the purpose. Ideally, it's high, but it goes down. Okay? True with butterfly spread as well. It's different than a calendar spread. Calendar spreads, ideally we want the implied volatility to go up. Now, where's implied volatility going to go from here? I don't know the answer to that. You guys can, you know, probably make a guess, but here's the VIX right now. I mean, we're at 27 on the VIX. Can it go higher? Yeah, it can go higher, no doubt. Does the VIX tend to stay elevated for a month at a time? It doesn't tend to, but we're treading through untrodden ground now. You know, I have no idea what oil or the war is gonna happen. What's gonna happen there? So yeah, we can say the VIX is mean reverting, but that's no guarantee for what the future is on that. Okay, let's go back to HPQ here and look at another trade. And let's start with the calendar spread on this. Okay, let's start with the calendar spread. Calendar spread, positive vega would tend to benefit if implied volatilities go up on us. What are we thinking? It kind of had this trend. Is it kind of leveling out now a little bit? Maybe that's leveling out. I mean, the 20-day, we were using that as kind of resistance maybe. We've broken actually just a little bit above it today, looks like. I guess yesterday, technically. Still below the 50-day. It would be below the 200-day as well. So neutral to bearish is what I'm going to call on this. And let's look at a calendar to start at least, and then we may tweak that a little bit. I'm going to go a little shorter term. I'm going to go to March 27th. Here's March 27th. So out just a couple weeks. And I'm going to do an stocks at 1888. I'm going to say, well, it's a little bearish, so I'm going to go on the lower side of that. I'm going to go 1850, put calendar. I'm going to sell the 1850. I'm going to go out. I'm going to give it at least a couple weeks. I'll probably go to, well, we'll go to the 28th, I guess. one problem is if you go to the monthly, do you see you don't have the same strikes? I did the 1850. There is no 1850 strike if I go to the monthly contracts. Otherwise, I probably would, just for liquidity purposes. But if you go out, I get the same strike. I'm going to hold my control key down and buy that. That's a calendar spread. Okay, so let's do this. Let's analyze it. Okay, analyze. There it is. And, you know, we can look at this and we can say, not a high probability trade, probably. Let's see, we're doing March 28th. Got that. I'm going to set my slices to break even. And about 44, 45% probability here. But if you want to make these more directional, this is just a straight calendar, what you could do is you can diagonalize it. Okay. And, you know, this is, how do you diagonalize it? You change the strikes. You make the strike, we're going to make this long strike. Oops, it's not going to let me change them one at a time. So I'm just going to change this from calendar to custom right there. Then it will let me shift my long strike. And then if I go to there, now how does that look? That's a much more bearish looking. It gives me the possibility. Now, if this goes way down, am I making a lot? No, I'm not making a lot down here. But I'm not losing either if it goes significantly down. If it goes up, that's not so good. I don't want it to go up above about 19.5. But the sweet spot, kind of anywhere in there. Probably we'll say between 17.5 and 19 is where we're looking for, what we're looking for on that. Let me just look real quick. 17.5 and 19. Does that fit with what our technical approach is? 19, 17.5. Do we think this, from a technical standpoint, is likely to end up in this range, in this zone there? So there we go. That's a way to take that more neutralish trade, make it a little bit more bearish. And I'm just going to do this trade. I'm going to do the same thing over here. We made this one a 19 and confirm and send. And we're just going to put this in that category right there. Okay, so let's kind of just review what we did today. We talked about the process of finding stocks or optionable stocks for potential trades. A couple of weeks ago, we talked about doing it on a bullish side. This week, we talked about doing it on the bearish side. It's really easy. You create a simple scan. We did one example, one possibility today, and then you save the scan. Now, I'm not saying trading is easy. I'm not saying making a profit is always easy. What I'm saying is creating the scan, saving the scan is easy. That's all I'm saying here on this. And once you have the scan, it's easy enough to simply pull up the scan over here. It automatically updates anytime you look at it, and you can go through and you can just kind of go through and look at the different stocks in there and see if you like those stocks there as potential trades. This is the starting point. It's not the finishing point. You still need to evaluate the stock and evaluate the options, but there you go. All right, now, make sure you subscribe to the Trader Talks webcast. If you're watching on YouTube, probably bottom right of the screen, you should be able to subscribe if you have not already subscribed. That way you don't miss future content that you want to see. And, you know, there's a variety of webcasts we have on that channel. Also make sure for additional financial content throughout the week, you can go to X, formerly known as Twitter, at Brent Moore CS, at James Boyd CS, and many other coaches out there on X as well. Coming up next, we've got market and sector analysis. I appreciate you, James. Thank you for helping me on the chat as always. And everybody, have a wonderful day and a nice weekend ahead. Bye-bye, everybody.